Okay, so we'll go through a couple of slides and just overview of KIT, and then we'll review the second quarter and first half updates, and then there's some additional information in the back of the deck, which we will not go through, but will be made available for everybody. Okay, so KIT, I think this should relatively be straightforward for everybody. We are the largest diversified business trust in Singapore. Our assets are, strategic businesses as well as individual assets, and we provide essential products and services to our customers. They are highly defensive industries, and they, by definition, therefore support long-term sustainable cash flows. Total assets under management about $5 billion as of June 30th, and the backing of our cash flows, I think importantly, are backed by either AAA credit-rated Singapore government-linked entities, and we have a slide on that. Or credit-worthy counterparties, or we serve a very large and well-diversified customer base. Our distributions are extremely stable. I know there's some questions around the DPU, but DPU has been 3.72 for every year since fiscal year 2016. The businesses have all been classified as essential services by both Singapore, Australia, and New Zealand throughout the COVID situation, and there has been no impact to operations during the COVID-19 pandemic. So that really reinforces the comments that we have made initially, which is that we have a portfolio of assets which are provide essential services, are highly defensive, significant barriers to entry, and therefore generate predictable long-term cash flows. Okay. In terms of geography, right now, we are really just in Singapore and in Australia. 6 of the assets are in Singapore and 2 of the assets are in Australia. So the assets in Australia are Basslink and Ixom, which was the recent acquisition in 2019. A little bit more about the off-takers. City Gas is the monopoly provider of piped town gas here in Singapore, and we serve more than 860,000 residential and commercial industrial customers here. Ixom has 8,000 customers. That's a highly diversified business. It also provides all the chlorine for all the municipal water supply companies in Australia. So when you think about Ixom, you can think of it as a business which effectively is sort of a water company. It just provides all of the chlorine that all the municipal water companies need in Australia. So if you need clean water, you'll be a customer of Ixom in Australia. Basslink, the off-taker there is Hydro Tasmania. I believe they're rated AA. We are the only interconnector between Tasmania and the mainland of Australia, in Victoria, and the off-taker is a 100% owned subsidiary of the state of Tasmania. KMC, which is the power plant, which we own 51% of, with our partner Keppel Electric, they are also the off-taker, and we provide availability to Keppel Electric, and we receive in return, capacity and availability payments. So we have no exposure to the retail merchant market here in Singapore. And then we have the waste and water treatment facilities, and those are off-takers are the NEA and the PUB of Singapore. And again, those are availability-based, capacity-based payments. So in terms of businesses by assets, in terms of percentages and geography, Geography is relatively straightforward, as we explained before, but it's roughly 50-50. Singapore slightly more than Australia, New Zealand, and then from an asset perspective, $5 billion. What you can see here is that really no single group of assets or segment is a we have overexposure in at this point. In terms of results, the highlights are, again, all the businesses were classified as essential services. We did well through the COVID-19 lockdown period, and there were no disruptions to operations. Resulting distributable cash flows were, up at $62.2 million for the second quarter, bringing first half to not quite double that at $113.3 million, and that's a 20.3% year-on-year increase over the first half of 2019, and we'll explain why that is. Distributions, again, stable, 1.86 cents, and are, I guess, one of those significant things that we did in the first half here was the refinancing of KMC, which was I think the largest sustainability-linked loan for the electricity sector, and that improved our weighted average term to maturity to 3.2 years. We are, on a consolidated basis, under-levered at 33.6%, so we have significant headroom, and we can talk about how that positions us for growth. In terms of business highlights, at the city gas business, very stable, grew the base by 1.2% year on year. Availability was again at 100%. That's an important metric for us with our regulators. The town gas demand in the C&I sector was a little bit weaker, as would be expected. But that was partially offset by stronger demand in the residential area. The DCF was higher for the second quarter, and that is primarily the result of a timing difference for the pass-through of the tariff. So there's a lag period between the effects of lower gas prices or higher gas prices and the effect on the tariff when that gets increased or decreased as a result of those gas prices. So it's simply a timing difference. But importantly, city gas has no exposure to fuel price risk over time. So we may over-earn during one period and under-earn over another period, but on average, that will all even out, and we have net no exposure to gas prices. At Ixom, Ixom did extremely well during the COVID lockdown. It was declared an essential service, which is the way we had originally looked and analyzed the business. As we said, it's a diversified business. The life sciences segment, in particular, delivered strong performance as a result of increased demand for cleaning and hygiene products. That was offset a little bit by weaker demand for pulp and paper and metals and mining. The milk segment remained strong as well, despite some softness in the beginning of the year due to the fires down in Australia and the drought in New Zealand. But that's picked up. We continue to obviously ensure the supply of essential chemicals for the key industries, and in particular the municipal water supply companies that we talked about earlier. VasLink, again, availability at 100% for the first half, and we are able to share a little bit of increased revenues due to the commercial risk sharing mechanism inherent in that contract, but that was neutral in the second quarter of 2020, which is slightly softer compared to the first half of 2020. So with the effects of COVID coming in the second half, we didn't see as much volatility in the market in Victoria, and hence the CRSM was neutral. For energy, contractual availability at KMC, 97.9. There was an unplanned outage that was rectified. As we mentioned before, we secured the $700 million loan. And the last point there, I think, is a repeat of what I said. We don't have any exposure to the merchant market here in Singapore. On the waste and water side, really nothing to highlight there other than we fulfilled all our contractual obligations and operations remain stable. Just diving into the numbers a little bit. So you can see that the second quarter performance over second quarter 2019 was up 35%. First half 2020 to first half 2019 also up about 20%. At City Gas, that is largely driven by the timing difference, so lower gas prices, and the fact that there's a 3-month lag for those lower gas prices to factor into the tariff, results in us over earning on a revenue basis. And like I said, that will even out over time. Ixom, we acquired the asset in February 2019, so the half year on half year comparison will be dramatically different. On the second quarter to second quarter, I think again that's not 100% driven by the date, but that performance is really driven by some of the cost cutting and focus on operations and the improvements that we had talked about when we were going to do when we acquired the asset. So we're now into our second year of ownership, and we're starting to see some of the effects of that. We clearly are not receiving any dividends from DC1 in 2020 due to the sale of that asset at the end of last year. The energy segment, again, we had the unforced outage. Waste and water, very, very stable. And others, this is just the effect of the perpetuals that are outstanding, and we have a full timing impact of the perpetuals for 2020 versus 2019. In terms of DPU, I know a lot of questions around, are we going to increase the DPU or not increase the DPU? I think the answer to that question is in the bottom part of this graph, which is the yield for KIT is 6.8%. I think this compares favorably to the alternatives that investors have in the marketplace. I don't think that there is an alternative investment which has the same credit quality of cash flows that we've talked about a couple slides ago with respect to the NEA contracts, the monopoly provider of town gas here in Singapore, the diversified revenue and customer base for Ixom, and the sole provider of chlorine for municipal water supply companies down in Australia, and the off-taker for the power plant, where we have no merchant exposure to the Singapore power market, and our credit off-taker there is Keppel Electric, a wholly owned subsidiary of Keppel. So I think the answer to that question is pretty evident, that the yield is, I think, arguably probably higher than it needs to be given the credit quality of the off-takes. In terms of balance sheet, as we mentioned before, we have a healthy balance sheet. Gearing is low, and we're well positioned to grow. annualized EBITDA at $400 million. We are, I think, as a company, well positioned to grow, pretty aggressively from here, and we certainly are looking forward to that. And the M&A market has been somewhat slow due to the COVID-19 situation, but we are seeing more and more opportunities, and those are interesting, and so our pipeline is full. And with that, I think we can close the session.